Welcome to the deep dive. Today, we're doing something a bit different. We're skipping the prepared remarks, the executive intros, and jumping straight into the real action.
Yeah, straight into the Q&A.
Exactly. The Q&A session from Novo Nordisk's Q3 2025 earnings call. This is where things get interesting, where analysts really put the pressure on.
They're asking the tough questions about competition, about market share, about this whole huge GLP-1 landscape shift.
It's a revolution, really. And our source material today is just that raw Q&A transcript.
Right, and our mission. To figure out how Novo is responding directly, unfiltered, to some, well, frankly, massive challenges.
What are those main challenges we're seeing?
Three big ones jump out. First, this really intense competitive pressure that's leading to actual market share loss. Second, trying to understand the strategy behind this massive $10 billion acquisition they're proposing.
Okay.
And third, just the sheer complexity and, frankly, the headaches of actually selling these blockbuster drugs, especially in the U.S. market.
Yeah, and when you read through that Q&A, you can feel the tension. So we've boiled it down. Three key things you really need to grasp from this session.
Okay, what have we got?
First, the scale of the market share drop. It's worse than maybe people thought. Second, they're explicitly putting $10 billion on the line for a specific asset, a once-monthly drug, to try and regain ground.
A big bet.
Huge bet. And third, this absolutely shocking number, the estimate that well over 1 million patients are now getting these GLP-1 drugs through compounding pharmacies, the shadow market.
Wow, over 1 million. Okay.
Yeah. So let's unpack this, starting with that headline issue that really kicked off the Q&A.
Market share loss. The analysts didn't waste any time at all. I mean, the very first question went straight to the CEO, Mazir Dalstar, about erosion.
And the number.
Globally, across the whole combined GLP-1 market diabetes and obesity, Novo Nordisk lost 9 percentage points of market share in the last year.
9 points. That's not a small dip. That's a serious shift. Billions in potential revenue moving elsewhere, mostly to their main competitor, you have to assume.
Exactly. And it gets even starker when you look at international operations, or IO.
Right.
The CEO confirmed figures showing that just 2 years ago, their IO market share was hovering around 80%. Today, it's plummeted to 50%.
50%. So they've lost nearly half their dominance outside the U.S. in just 2 years. That's dramatic.
It is. But what's really interesting is how the CEO framed it. He kept pushing back against the idea this was just a short-term loss. He used his favorite line, it's a marathon, not a sprint.
Okay, the marathon line sounds good, but 9 points globally, 30 points in IO. That's a sprint problem right now for investors, isn't it? Did the analysts push back on that? Like, what actually went wrong?
They definitely pressed. But the company line, the strategic answer, wasn't about defending every single point of share right now. It was about expanding the whole market instead.
Expanding the pie rather than just fighting over slices.
Kind of. The key initiatives they talked about were, first, really sharpening their focus purely on diabetes and obesity. They're pulling resources out of other areas they specifically mentioned, stopping the Parkinson's stem cell research to double down.
Okay, focusing resources. What else?
And second, aggressively expanding access, making the drugs easier to get. They listed a whole bunch of new commercial deals, partnerships with big names like Costco, Walmart, GoodRx, LifeMD, Ro, trying to smooth out that friction for patients.
That makes sense for the U.S. market, trying to get broader reach, but that huge IO drop, that 30-point fall, how do they explain that specifically? It can't just be market dynamics.
No, he gave specifics. He said the IO losses are complex, partly market dynamics, but also specific regulatory hurdles. China was the key example.
China.
Yeah. He said they're basically losing the battle for online sales there because Wegovy isn't allowed to be sold online currently.
Wow, interesting.
Which means competitors who have established diabetes drugs already approved for online sales have this massive advantage that Novo doesn't. It shows it's not just about the drug itself, it's about navigating these local rules.
Okay, that's a really crucial point. So if this global competition is forcing a strategy shift, like focusing resources and tackling access, the next logical move is often M&A, right? Going on the offensive.
Exactly. Which leads us straight to the second major theme. That huge $10 billion potential deal for Metsera.
Right, the $10 billion question. Analysts jumped on this. If your internal pipeline, CagriSema, oral Wegovy, is so fantastic, as I kept saying, why spend $10 billion externally? Doesn't that signal maybe a lack of confidence internally?
That was precisely the challenge. But management pushed back hard. Their core message was, this isn't desperation, it's about complementarity.
Complementarity, meaning?
Meaning, if you genuinely want to treat, as they put it, hundreds of millions of people, then no single pipeline, not even theirs, is broad enough. You need a whole portfolio. Different drugs for different people, different needs.
Okay, so what's so special about Metsera's assets then? What makes them worth that kind of money, and how do they complement what Novo already has?
They highlighted a few key things: potentially better efficacy, safety, tolerability, easier manufacturing or scalability, and crucially, dosing frequency.
Ah, the convenience factor.
Big time. They're really excited about two assets in particular. First, MET-097. This one has the potential to be a best-in-class, once-monthly GLP-1.
Once a month. Okay, that is a big deal compared to weekly injections.
Huge patient convenience potential. And the second one is MET-233, which they described as a next-generation amylin asset. So a different mechanism, potentially synergistic. They're basically paying for future options and broader patient coverage.
Let's break down that $10 billion, though. Because the structure of the deal isn't straightforward, and it definitely caught the regulator's eye. We should clarify that for you listeners.
Yeah, this is important. It's not just $10 billion cash up front. The actual proposal is for an initial payment of USD 6.7 billion. And that gets them 50% of the shared capital, but structured as non-voting preferred stock.
Non-voting. Why is that significant?
It means Novo gets the assets, the pipeline, but they don't necessarily get immediate shareholder influence or control hassles while they integrate things. It's a way to manage the integration risk, maybe.
Okay, so $6.7 billion upfront. Where does the rest of the $10 billion figure come from?
That's tied up in what are called contingent value rights, or CVRs, up to another USD 2.8 billion.
CVRs. Remind us what those are.
They're basically bonus payments. Metsera's original shareholders only get that extra money if certain specific things happen down the line, like hitting clinical trial targets or getting regulatory approvals. It's performance-based. So the total potential payout is up to $10 billion.
Got it. Performance-based milestones. And they did confirm during the Q&A that the regulators are already looking at this.
Yes, they confirmed the FTC has contacted them asking for information about the Metsera deal.
Right. Which, is pretty standard for a transaction this size involving major players in a hot market.
Standard, but it absolutely means the deal isn't done yet. It adds uncertainty and definitely pushes up the timeline for closing. Depends entirely on getting that regulatory green light.
Okay, so global competition, big M&A plays, that's one side of the coin. But then there's the sheer difficulty of the U.S. market itself. That came through loud and clear, too.
Oh, absolutely. David Moore, who runs U.S. operations, gave some pretty sobering numbers on prescription trends. Wegovy weekly scripts, they're actually down slightly.
Yeah?
From about 280,000 a week previously to now 270,000.
Down! With all the demand we hear about. Why the slowdown?
Well, according to the executives, the main bottleneck isn't lack of demand. It's what they call the quality of access, specifically in the commercially insured part of the market.
Quality of access, meaning?
Meaning, basically, red tape. Massive friction from things like utilization management and really burdensome prior authorization requirements.
Ah, the paperwork nightmare.
Exactly. So even if your insurance technically covers the drug, you or your doctor have to jump through so many hoops, forms, phone calls, justifications that it massively delays starting the drug or just blocks it entirely for many people. That's what's capping the growth in new prescriptions.
That makes sense. Bureaucracy getting in the way of demand, but maybe the most startling number from the whole call was about compounding.
Yeah, that was genuinely shocking. Management shared their internal market research estimate. They believe compounded, essentially unapproved versions of GLP-1s are now being used by well above 1 million patients in the U.S.
Over 1 million people using compounded versions. That's staggering. That's like a whole shadow pharmaceutical market operating in parallel.
It really is. And obviously, Novo executives were quick to flag the safety concerns, right? Because the active ingredient, the API, being used in many of these compounded versions isn't approved. Its source is often unknown, its purity uncertain.
A huge safety risk.
Huge risk. But from a business perspective, that's over 1 million potential customers who aren't getting the approved branded drug. That scale fundamentally alters how you have to think about the U.S. commercial landscape.
Definitely. Okay, shifting gears slightly within the U.S., let's talk Medicare. Huge potential market, right? They mentioned roughly 30 million Medicare-eligible people suffer from obesity.
Massive opportunity.
Right.
But it comes with a massive regulatory challenge. The Inflation Reduction Act, the IRA.
Right. The price negotiation part.
Exactly. And Novo confirmed on the call. They have accepted the IRA maximum fair price, MFP, for their whole semaglutide family, Ozempic, Rybelsus, and Wegovy. That price ceiling kicks in on January 1st, 2027, specifically for Medicare Part D patients.
Okay, 2027. So this sets up a really tricky situation, doesn't it? Management talked about how they've always had different prices for different customers. Medicaid pays less, commercial insurance pays more, cash buyers somewhere else.
That's the historical model. Price segmentation.
But now the government is going to mandate a lower price, the MFP, for this huge Medicare group. How long can they possibly maintain those much higher prices for commercial plans when there's this government-set benchmark right there? That segmentation seems like it has to break down eventually.
That's the core financial tension right there. It feels unsustainable in the long run, doesn't it? That pressure is immense.
It really does. Oh, and we should probably quickly mention the device issue, too. They got a bit of a setback on the Wegovy pen.
Yeah, a minor bump. They got a complete response letter, a CRL, from the FDA about the Wegovy FlexTouch delivery pen. Basically means the FDA needs more info before approving that specific device update.
So what are they doing about that?
As a backup, and maybe to give them more flexibility anyway, they mentioned they're looking into offering Wegovy in simpler vials instead. That could potentially help serve that growing cash pay market better in 2026, giving more options.
Okay, vials as an alternative. Got it. Let's move to the internal pipeline then. What's the latest excitement there? Oral Wegovy has to be top of the list.
Absolutely. The semaglutide pill for obesity. That's potentially the biggest game changer for adoption and convenience.
And the timeline.
They're expecting the regulatory decision late this year, 2025. And if it's a yes, they're ready to launch in the U.S. in early 2026.
Early 2026.
Right.
And crucially, how are they planning to roll it out? Which channels?
This was key. They confirmed all channels.
Yeah.
Commercial insurance, Medicare, Medicaid, and yes, specific cash pay offerings too. Right from the start.
All channels. Okay.
And interestingly, they also mentioned considering launching it in selected markets internationally in I.O. during 2026 as well, which really shows they're feeling that competitive heat globally and need new options there, too.
That makes sense. What about Tagrisema? That's the combination drug. There was some interesting commentary about the main study, Redefine 4.
Yeah, Martin Lange, the chief scientific officer, talked about this. He confirmed that the base case for their amended big trial, Redefine 4, is now aiming for non-inferiority on weight loss compared to a key competitor.
Non-inferior, not superiority. That sounds like they're maybe lowering expectations. Or conceding they might not win on sheer weight loss percentage.
It definitely signals a strategic nuance, maybe a pivot. Lange explicitly said they would still launch Cagrisema, even if it only meets non-inferiority on weight loss.
Why? If it's not better on the main measure.
Because they're planning to differentiate it elsewhere. The bet is that Cagrisema might offer potential advantages in tolerability, maybe fewer GI side effects, which is a big issue for patients, and critically potential cardiovascular benefits.
Ah, the CV angle.
Exactly. And they expect to get the first big readout on those potential CV benefits from a different study, Reimagine 3, sometime in the first quarter of 2026. So the strategy is maybe not the absolute most weight loss, but potentially a better overall experience and better heart health outcomes.
Interesting. Okay, one last pipeline point, the high-risk stuff. Alzheimer's, the Evoke trials, data coming soon.
Great.
Yeah, data expected late this year, very high risk, high reward area. And analysts specifically asked, if the data turns out negative, will you just bury it?
And the response?
Lange was very firm. He stated clearly, first, they do not have the data in-house yet. If they did, regulations would force them to announce it immediately. And second, they are fully committed to presenting the results, good or bad, win or lose, at the CTAD Alzheimer's conference in December.
Okay, commitment to transparency there, even if it's bad news. That's good to hear. All right, before we wrap this deep dive, let's quickly touch on the financial outlook. What did the CFO say about next year, 2026? Sounds like growth might moderate a bit.
Yeah, Carsten Knudsen, the CFO, specifically called out a few factors that are going to act as headwinds, dragging down operating profit growth next year compared to maybe what people were used to.
Like what?
Okay, first, there's about a 2 percentage point drag on sales growth just because some favorable gross and net adjustments they had in 2025 won't repeat. It's a technical accounting thing, but it lowers the growth rate.
Okay, 2 points from that.
Second, they expect a low single-digit negative hit to global sales because the main semaglutide patent is expiring, loss of exclusivity, or LOE, in some smaller international markets.
Right, patent cliffs starting to appear internationally.
And third, that recent acquisition of Echo Therapeutics, separate from Metsera, that's going to add R&D costs, leading to about a 3 percentage point negative impact on operating profit growth in 2026.
So a few different drags adding up there. 2 points from gross to net, a bit from LOE, 3 points from Ecro R&D. Makes sense that growth expectations might need adjusting for 2026.
Exactly. It's not doom and gloom, but it's definitely a more complex picture than just straight line explosive growth forever.
Okay, so let's try and summarize this whole Q&A deep dive then. What's the big picture? Novo Nordisk is facing this incredible, almost unprecedented volume opportunity with these GLP-1 drugs,
Huge demand, yeah.
but colliding right into equally unprecedented headwinds. You've got fierce competition causing real market share loss, especially internationally. You've got this massive $10 billion bet on M&A to try and counter that. You've got the IRA pricing pressure looming in the US, and this absolutely wild card of the compounding market just exploding underneath the official system.
That sums it up pretty well. They're fighting on multiple fronts. Their response seems to be betting heavily on differentiating their pipeline, focusing on convenience like the oral pill and the once-monthly injection, and really pushing hard on expanding access through partnerships, trying to win on breadth and ease of use, maybe as much just raw efficacy.
A complex balancing act.
Definitely. And it leads perfectly into our final thought for you, the listener, to mull over. Novo Nordisk has historically been masters of price segmentation, charging different prices at different channels like Medicaid, Medicare, commercial insurance, cash pay. They've managed to keep those segments fairly separate. So the question is, which of these massive pressures we've discussed today will be the first one to truly crack that segmentation wide open? Will it be the sheer scale of the compounding market offering cheap alternatives? Will it be the ripple effect of the IRA's maximum fair price setting a benchmark? Or will it just be intensifying head-to-head competition, finally forcing prices down across the board?
Which domino falls first and makes those different price points impossible to maintain?
Exactly. What finally forces anti-obesity drug prices overall to start trending downward significantly? That feels like the critical financial puzzle for Novo and the whole industry over the next few years.
A fascinating question indeed. The tension between volume, access, competition, and price. We'll have to keep watching that closely. That's our deep dive for today. Thanks for joining us.